Crypto Frog in the house. Not gonna do long intros anymore. You have my songs in full, uninterrupted. Let's get straight into it. Also, I've changed the chat to you have to be a subscriber now if you want to chat in the live chat. I'll have a look at the live chat later. But in this stream, we're going to talk about Dopex. It's like a dual token system. So there is DPX and rDPX. It's the Decentralized Options Protocol, and I am fucking bullish as fuck on it. So let's do a deep dive first. If you're not a subscriber, subscribe. If you want to leave a live chat, I will look at the live chat towards the end of the video. You have to be a subscriber. Haha! I make the rules. Thumbs up for the algorithm. She insists it's the crypto way. Asian chicks. Disclaimer: no financial advice. What you do with your money is entirely up to you. Okay. Right, let's get into it. Alright. By the way, you only have to be subscribed for like 1 minute to leave a chat. The way I figure it is it'll encourage more subscriberage, and it's a new option. I just noticed it. You can also follow me on Twitter, CryptoFrog202. So these are the tokens we're going to be talking about today. Dopex, DPX, current price as of making the stream $134. And Dopex rebate token, current price rDPX, current price just under $5. And they belong to Dopex. The website is Dopex.io, Decentralized Options Exchange. This protocol aims to maximize liquidity, minimize losses for option writers, and maximize gains for option buyers. And it's all going to be done in a passive manner for liquidity contributors. So if you don't want to use the options exchange, you don't have to. You can still benefit from them by being a token holder of either DPX or rDPX. As far as the team goes, they are anonymous, but they have a lot of backers, a slew of decent backers, in fact. They have 2 audits as well, one from Solidity.finance and another one from Solidified.io. Tetranode, who's like a giga whale on crypto Twitter, he's a partner / investor in this project. DeFi God, he's a big Twitter account as well. You've also got these partners: Ledger Prime, Orca Traders, Pattern Research, SCC Investments, DBase, RCZ, and DCV. You can see here the dual token model. 2 separate tokens to coordinate new ecosystem dynamics in a synergistic feedback loop. Talk about that more in a minute. Now, talking about the first one then is DPX. I wouldn't call one of them the main one and the other one the secondary one. They're both crucial to the ecosystem, and I shall explain. So this has a maximum capped supply of 500,000 tokens. I was looking at the Etherscan, and you can see the deployer here, all the contracts, Uniswap liquidity, all that kind of jazz. They have liquidity in V3 and V2 on Uniswap. I kind of did some basic maths, and I think only about like 55,000 are in circulation right now, possibly less. So this would put the market cap at around $7.5 million right now. As of the time of making this stream. Fully diluted value probably around 60 to 65 million. But it's going to take years and years and years for the max supply of these tokens to ever be out. Now, there was a public token sale, but given the market conditions, the current price, in fact, is pretty much what people paid in the market sale. As far as I'm aware, the public sale was like $135, so even slightly cheaper now. So you might be wondering how Dopex compares with other option protocols that have come out in the past. Some have done okay, others haven't really done very well. So how they differ is they want to really incentivize safe retail liquidity and allow for actual option natives to use the platform to buy options much more safely and efficiently. They say they can supply to the market because the exchange itself is not out yet. I'll show you the roadmap. June 21st, they wrapped up the public sale. June 24th, farming begins. What's the fucking date today? Oh, it's past that. Whitelisting for private testnet is July 1st. Private testnet launch is July 15th. And an end of July public testnet launch. I was asking in the Discord, and they did mention to me that they may actually be launching fully live at the end of July anyway. If anyone from Dopex is listening, I did leave a link in their Discord. You have to be a subscriber if you want to comment though. But they can supply this thing to the market that's never been supplied before, is what they say. What do options traders want? We'll get into a little bit more about what option trading is in just a minute's time. But what they want is fairly priced options across a far broader strike range, replicating supply and demand. Now the pools are created for all options on Dopex, and this allows anyone to take part in the deposit base / quote for the respective pools to get passive income from option writing and purchasing discounted options through liquidity providers, which can then be arbed for instant profits. Due to the fact that there's some risk for the writers in options trading, they have like delegates. They have 5 large option trading firms quoting them, apparently, when this was all up and running. The market's really crying out for rebates for writers in case of losses, so they are supplying that in the form of the rDPX token. That is the Dopex rebate token, as I mentioned before, ticker rDPX. And the people using the platform want volume so they can get more profits and can instantly arb. So straight off the bat, you'll notice, as I mentioned at the top of the stream, there are 2 tokens native to Dopex. They are DPX and rDPX. They both ensure the protocol works in a way that is suitable for everyone. Now DPX, let's focus on that quickly first then. This is the one with the cap supply. It's kind of like the governance token, but it isn't just some kind of pointless governance token with no value. I'll talk about that more in just a minute's time as well. It's actually used for collecting protocol and app layer fees. So you get the passive income by supplying your DPX to the platform, and you receive rewards for supplying it to the platform once it's all up and running. On the other side of things, you've got the rDPX, the Dopex rebate token. This is what is used to offer rebates for losses incurred for option writers based on exercised options for every epoch. And the rebates are paid in this token, rDPX. So technically it does have an infinite supply, kind of like Ethereum, but it has to be infinite supply because there's no saying how much they'll need at any one time. So might as well just make it infinite. So rebates are worked out based on the percentage losses incurred by option writers for an epoch and a percentage of rDPX relative to the value of losses incurred, minted and distributed to all the people in the option pool who need to get them. So this token here, the rDPX, basically allows people writing these options to make bigger profits in comparison to writing naked options or hedged option writing like that. So it's like an extra layer of cover for them. In the future, Dopex say that rDPX will also be used as collateral. Get this, this is butter, yo. This is absolute butter. This is the frequently asked questions. And how to value rDPX. So it doesn't have a supply cap, so rebates are impossible. Since rebates are impossible to predict, but it does hold its value because there is farming. rDPX will be a fee requirement for future contracts built over Dopex, like say vaults. rDPX will be used for collateral for synthetics, which could be used to create synthetic options for non-crypto assets. Holy smokes, bros, that's exciting. And fees collected with staking DPX could be boosted with rDPX. Talk about the farms in just a minute. So essentially you'll be able to mint all these kind of synthetic derivatives of assets, not just crypto, ETFs, commodities, like national currencies, the euro, the dollar, blah, 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 stocks, regular stocks, you name it. Something that can be made synthetic can be done using the rDPX token. So despite having this infinite supply, then this gives the token the real value, plus there's a real sexy like feedback loop for liquidity to grow, and it encourages option writers and traders to take part in the whole protocol. So that to me straight away is an advantage it has over its competition. Let's go back to DPX because everyone's interested in the tokens, of course. Cap supply 500,000. Governance token is part of it. You can vote on proposals, vote on what's going to happen within the protocol. However, it's not just a governance token. DPX provides you with fees and revenue from the pools, vaults, and wrappers built over the protocol after every epoch. So it's a bit of a money printer, if you know what I'm saying. Same goes for the rebate token, in my opinion. No financial advice. Let's have a look at the tokenomics. I'll just highlight it here. DPX. So they've set aside 17% for operational allocation. That's distributed over 5 years, and this is going to be put to work building the protocol, building the team, growing the platform, adding new features, putting new upgrades in there along the way. 15% is for farming. That's set aside for liquidity mining. Like I said, just more on that in just a minute. Farming period 2 years with initial boosted rewards period of 4 weeks. And that is now, let me tell you. More on that in just a moment's time. However, stay out of my motherfucking pool, biatch. No, joking. Well, I mean, I shouldn't really be spilling this kind of alpha. God dang it. You've also got your platform rewards 30%. They say these are going to be dished out over about 5 years. And these will be used to incentivize the use and upkeep of the platform. If you don't incentivize people to use the platform, they ain't going to use it. So this is butter too. And what I do like as well, the founders allocation is only 12%. In this day and age of like teams taking 20, 25%, that is a breath of fresh air. On top of that 12%, they put 1/5 of it in liquidity pools, just staking that baby, and 4/5 of it, 80%, is vested over the period of 2 years and drips out via a smart contract. So you don't have to worry about any team members dumping on your head. And then finally was the token sale. They had some early investors, half of that vested over 6 months, 11%, and token sale was 15%. And as I said at the top of the stream, really isn't that much of a difference between what people paid in the token sale to what the price is now, because obviously you've been through a couple of rough weeks, to say the least. Let's talk a little bit more about how the platform is going to work then. So it's going to work similar to DPX. Now, this is the market leader in the current so Dopex options are built to closely mimic Deribit. It's the market leader in cryptocurrency options. But you've got to remember about Dopex is that they're not just going to be offering cryptocurrencies. They're also going to be offering synthetics of, you name it, precious metals, national currencies, FX, ETFs, commodities, oil, blah-de-blah-de-blah. And also they use a European style of options trading. More on that in just a minute. They don't use the American version. Now, they were going to start out where did I see it? Anyway, I made some kind of notes anyway. So they're going to start out. They're not going to go like full Borg straight away. I think they're going to start out by the underlying assets that will be available to buy, sell options on. What they're going to do is they're going to start with like Bitcoin and Ethereum, test it out for a bit. That's probably at the end of July. And then they'll start adding other big cryptocurrency projects. Then eventually the synthetics will be added on top of that. And then there's one pool with multiple strike prices per base asset. So we're talking like wrapped Bitcoin, wrapped Ethereum, all that kind of stuff. This is kind of like a mock-up of what the platform is going to look like. This is the option chain when it's all set up and ready to go. And then this will be like your portfolio page. As you can see, it looks très professionnel. Core rewards, action rewards, rebates, farming. Your assets. And all your options here, whether you called, whatever. And then this is your option swaps. Now, if you're wondering what the pricing is going to be like, apparently they do have this special formula that basically replicates the volume based on strikes and the time to expiry, and they have applied as a multiplier on RV from uni LPs as the base. So delegates quote on multipliers that affect the formula. They can change the steepness or dampness of the curve to account for supply demand risk and a whole bunch of other things. Now you have a basic understanding of Dopex. Let's talk a bit about the farming options. As of right now, bear in mind this is a new project, guys. Total value locked is at $13.4 million. They have $9.2 million worth of DPX. So, I mean, the vast majority of the circulating supply is being staked. You can solo stake DPX for 42.33% APR. You can also put liquidity in the Uniswap pool with DPX wrapped Ethereum. $3.6 million in that. APR pulling in at just under 270%. And then you've got your rDPX wrapped Ethereum, which is my pool. Don't want any of you motherfuckers trying to sneak in there, god dang it. That's got under $500,000 TVL and APR of 1172.8%. Wonder why Crypto Frog chose that one. So now you got a basic understanding, I hope, of Dopex. You can have a look at the website, dopex.io, or just put DPX into Gecko or rDPX into Gecko, and it will take you to the home page. So this UMA protocol is going to provide synthetic assets like indices, stocks, minted with rDPX, as I mentioned, as collateral on UMA. Awesome. Chainlink oracles provide Dopex with pricing and volatility data. Epic. Constant yield, then you can, let's just go through this. So built different. DeFi first and powerful options. So price efficiency, discounted options with instant ARB opportunities, deeper liquidity, purchase and swap options with any strike price, minimize risk, offset risk and minimize losses as a liquidity provider with rDPX, rebates, constant yield. Now you're talking my language, goddamn right. Earn DPX as rewards constantly when providing liquidity to option pools. As you can see, here, once it's all up and running, you'll be able to see the farming down there. So if you're not really interested in options trading, you don't have to. You can just farm and earn rewards for providing liquidity to the option pools, which I'm sure pretty much everyone's going to be doing. Fully collateralized. All options have the collateral to back them, removing the risk of third-party defaults. Very important indeed. Since with rDPX, mint synthetic assets like stocks and indices using rDPX as collateral. Oh, mama. Quickly then, let's have a run through of options trading. I'm not going to go deep down because there are plenty of YouTube videos, there are plenty of books, there's plenty of articles you can read. I will just give you a quick overview of what options trading is, because it can be a bit of a money printer if you know what you're doing. But if you don't know what you're doing and you try options trading, there's like a 99.99999% chance you will get wrecked. So if you want to try a hand at options trading, because you can make an awful lot of money with very little outlay if you're good at it. All right, so let's go through it then. Options. What they are, they represent the contractual right to buy or sell blocks of, say, 100 shares in the underlying security. So we're talking any security within the Dopex protocol. Now, because each of those options then has 100 shares, they often provide volatile leverage-like returns. and are used by professional investors who, Dopex, want to use their protocol. The more big boys that come in and use Dopex, the more money regular folk who just slam some DPX or slam some rDPX in the pools will reap the rewards in terms of yield. Correct? Yes. So it's really very sophisticated, to be quite frank with you. But there are some clever retail investors as well, because if you know what you're doing, it can be very lucrative indeed. There are two types of options. As I mentioned, the type used by Dopex is European, but there are also American options. So let's briefly go through the difference. American options, which isn't used by Dopex, that gives you the right as the holder to exercise the option at any given time prior to the expiration date. So when you open an options trade, there is an expiration date. In the American version, you can exercise the option whenever you like under the American version. So the European version, you can only exercise that at the actual expiry date. All right, so whether you choose a day, a week, a month, that's how long you'll have to wait under the European option. So every option has two different pricing components that justify its current market value then. So you have the intrinsic value and you have the speculative value. So the value in this case is the intrinsic value plus the speculative value. Intrinsic value is how in the money an option is, and the speculative value is the chances of it becoming even more in the money by the time your option expires. You get me? I'll give an example. So a call option has a strike of, say, $100, right? And the current price is $120. That would mean that would put the intrinsic value at $20. However, the option expires in, let's say, a week, and say it's being traded at $30. That would mean the additional $10 difference above the $20 is the speculative value of the option, and that $10 represents investors speculating the option will become even more in the money within that time frame. Like I say, there are probably videos out there that will explain options trading to you in a much more straightforward way than I. Another thing you got to bear in mind when you do options trading is volatility. We all know about volatility. We're in cryptocurrency. For options trading, there are two kinds: realized, unrealized. So realized volatility is the historic price movement of the crypto or the synthetic asset. It's measured as the standard deviation or deviation from the average price over a given time frame. Easy. Unrealized volatility, that is probably the most important out of the two in regards to options trading. To put it as simply as I can really, unrealized or implied volatility is the expected magnitude of future price changes expressed as an annual percentage. So this expected yearly price change can be expressed in numerous different ways. But what is important, that the crypto market normally have so much more higher implied volatility than, say, stocks, which would then give you a much larger annual expected range. Now, I don't want to go too much into detail, but there's an also thing you need to brush up on if you want to get into options, if you want to work it out, if you want to try Dopex when it's live, or if you just want to buy DPX and rDPX and yield the farms. And I expect big things from this project, considering basically I worked out Dopex's, DPX's market cap is like well less than $10 million. And I read an Ask Me Anything with a couple of the team, and they are aiming for, I know projects aim for things, but I really can't see why they wouldn't aim this high. They are aiming for 11-figure market cap. Over what time period, I can't remember what they said. But from like sub 10 million to 11 figures. Which is like tens of billions market cap. But going back to the options then. So there are these different assumptions. So you have these things called the Greeks. It is mentioned on the Dopex. You can read all about it. I saw it before. Where you gone, motherfucker? See, stocks, commodities, ETFs, indices, cryptocurrencies. They're using UMA protocol. Sexy! Got all their contracts there. Where did I see that goddamn Greek thing? Oh, plus they have Chinese, Russian, Korean, and Turkish. So they go multi-language, baby. Oh, I can't remember where I saw that. Anyway, basically they're like Greek letters. So there are certain assumptions that are priced in to every option you buy, right? So these assumptions are often represented by Greek letters. And by understanding what they are and how they influence the option's value, you can better understand what you are betting on and whether risks are on your side or not on your side. If you want to start options trading or start learning about it, perhaps this is something that really excites you and something you want to have a go at. Because as of now, options trading isn't really something the average Joe can try his hand at. But now with Dopex coming out, the average Joe can have a go at it. But you should really know the following ones: forward, backwards, and sideways. So you've got Vega, Delta, Gamma, and Theta. Not the cryptocurrency Theta. Theta, the Greek letter. Learn those. Watch some YouTube videos on it. Read some books. I could go on, but perhaps you're not learning anything from me that you couldn't learn better from an actual expert who perhaps trades on Wall Street, right? Some other things to learn, though. Quickly, I'll just reel them off. Delta curve, covered call, protective put, bull call spread, bear put spread, collar and straddle. And not the straddle you put on in poker. As I touched upon before, so they use UMA protocol to create these synthetic derivative tokens using rDPX as collateral. These tokens differ from traditional on-chain derivatives since they are securely collateralized without an on-chain price feed. So you might be wondering, well, why is Frog so bullish on this? Well, A, it's going for a fucking enormous giga market, yo. Traditional finance, options trading, the volume is in the hundreds of billions, trillions of dollars. A deribit, which Dopex are hoping to mimic somewhat, they did circa $15 billion volume just on Bitcoin alone. And we're talking about a project right now that has a market cap, even fully diluted market cap in terms of DPX, of under $10 million, right? The current market cap puts it at that. I like DPX. I'm more of a fan of rDPX. As I mentioned before, it doesn't have the supply cap because, as the team say, rebates are impossible to predict. But there are the use cases that I mentioned for rDPX that I really like, that ensures it holds its value, as I touched upon earlier in the stream. Here, if you go to frequently asked questions, it tells you rDPX wrapped ETH LP token usable for DPX farming. Correct. So if you put rDPX and wrapped ETH in the pool, you not only earn rDPX back, you also earn DPX. It's absolute butter. Plus, in the first 2 weeks, I think they're just a few days into the first 2 weeks, it's like 2x. After the 2 weeks run out, it will just go down to 1x. So there's still a chance it will be like a few 100% on rDPX, and may still be above 100% in a couple of weeks on DPX wrapped ETH. But DPX solo staking might reduce somewhat. But to me, it's quite astonishing how cheap this is per token, both of these. It's crazy, yo. Not financial advice. But rDPX as well, that's the fee requirement for future contracts built over Dopex, say vaults and whatnot. rDPX, that's used as collateral for all the synthetics that are going to come out. Could also be used to create synthetic options for non-crypto assets, as I touched upon before: gold, platinum, silver, copper, oil, you name it. Also, the rDPX, the fees collected with staking DPX can be boosted if you have a bag of rDPX as well. Buttery no. Now, the team apparently expect that the rDPX isn't going to be inflationary at all. In fact, it could very well have deflationary properties to it, since it has to be used within the system, constantly being reused, which is like Ethereum. Ethereum constantly, you can't just run out of Ethereum one day, the whole system would fall apart, right? Also, another thing I should mention is that they're going to have the core options exchange platform is going to launch on Arbitrum Layer 2. Shit! Which is good too, because cheaper ass fees, and makes arbing easier because it's a lot faster than Ethereum or whatever. So they're going to have options pools, single click deposits that auto roll over assets to the next epoch. That's sticking to the European style of doing arbitrage shit. Layer 2 to mitigate fees, yes, and make arbing faster and easier, because arbs, they come and go like that, baby. Ding, 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 ding. You've got to move fast. Fair pricing. They're going to move into more cryptocurrencies. They're going to move into commodities, ETFs, regular stocks, Tesla. Short that shit. Fuck yes. There will be apparently an over-the-counter portal as well for block trades. Sometimes you do have large trades that would do like huge giga volume. They are going to also have a team of market makers from actual top quality market making firms, and they're going to be pouring billions of bucks through this protocol. Yeah. And market cap is like sub $10 million. Circulating. Fully diluted around... I just did it. Let me do it on my calculator now. Fully diluted. 134 times 500,000. $67 million. Fully diluted. And this is hard to say, but probably I'd say less, considering that in the farm, for some reason people aren't jumping in that one, which I find kind of ridiculous. But there you go. Right, let's have a look at the chat. But yeah, I'm super tray bullish, yo. Super tray. I put this in my trifecta of make it coins, yo. Woo, Olympus, OHM, and DPX, rDPX. They're the same thing. It's the same thing. Dopex, Woo, and Olympus. Fucking bullish as fuck. Disclaimer, no financial advice. Right, let's pull up the chat. Sup, Froggo. That's dope. 20% circulating supply per TG. All right, so let's divide that by 5. Okay, so the circulating supply market cap is $13.4 million. Holy shit. When will you be able to put property on the blockchain? That'll be massive. Well, you can put synthetic property on the blockchain, I guess. DEXs are going to explode when Binance gets wrecked from regulations. Yeah, probably. Options are a way to trade with leverage, calls, longs, puts, short. Correct, sir. I'm not talking about any other coins, but Dopex. I hope you enjoyed the video. If you did, subscribe. Thumbs up. I'm Crypto Frog. Until next time, peace out.